Yes, good afternoon, everyone, and welcome to our Q3 2018 conference call. With me today are our CEO, Tim Höttges, and our CFO, Thomas Dannenfeldt. Tim, as usual, will first go through a few highlights for the year to date, followed by Thomas, who will talk about the quarter's financial in more detail. After this, we have time for Q&A. Before I hand over to Tim, please pay attention to our usual disclaimer, which you'll find in the presentation. And now it's my pleasure to hand over to Tim.
Yeah, thank you, Hannes, and a warm welcome to everybody. Q3 of Deutsche Telekom was another good quarter with strong growth on both sides of the Atlantic. To simplify it, all business areas are growing on a profitability basis, and I think this is unique looking back. After 9 months, our organic sales is up 2.8%. Our organic EBITDA is up by 6.2%. Our ex-US business, our EBITDA is up 2.5%, and our free cash flow is up 8.5%, and adjusted earnings 9.7%. So with this, I hand over to Thomas. No, I'm kidding. All of this is nicely consistent with our new 4 years growth guidance, which we have laid out at the Capital Markets Days in spring. Our operational momentum remains strong across the board, and you saw the good numbers and the guidance upgrade in the US, which we are reflecting in our group guidance today as well. Germany and Europe are growing as promised, and T-Systems is on track to grow next year. We were very pleased that the European Commission approved our takeover of UPC Austria, creating a converged leader in this attractive market without any remedies. Continuing on slide 5, the foundation of our strong growth are our consistent investments in the infrastructure and the network. Our fiber networks in Germany and Europe are passing now 39 million homes, and an increase of 5 million in the last 12 months. In Germany, we already passed 8 million homes with super vectoring at the end of September, 2 months after launch, enabling 250 megabits per second for 8 million households. The German regulator has set the wholesale rates for super vectoring, importantly granting us an extra €4.80 per month for 250 compared to 100 megabits per bit stream. This shows consistent respect for the principle of higher prices for higher speeds. We agreed a fiber wholesale access framework with EWE TEL, which will now be discussed with the relevant stakeholders. Our German fiber network now measures 500,000 kilometers. We reached our planned 2018 milestone of developing 100 business districts in October, already passing 31,000 lines with direct fiber. Our German LTE network already passes 98% of the population based on the German regulator's definition. At our recent network day, we communicated an 8-point plan, 5G for our country, in which we outlined some targets for 5G, including the unilateral commitment to cover 99.3% of the population and 90% of the area with 5G by 2025. In Europe, we increased our LTE population coverage by 3% points to 96% in the last 12 months. We won a few more networks tests this quarter, including Greece, Netherlands, Hungary, and the US. We continue to make further significant progress with our IP migration. We are on track to complete this peer-leading project as communicated at the Capital Markets Day. Our IP migration not only involves significant extra costs, as you are surely aware of, but also negatively impacts our fixed line KPIs and our top line, especially in the German segment. This is something to keep in mind when you assess our operational performance. The good news is that the IP migration is a temporary drag and that the end is now firmly in sight. In Germany, B2C, we will finish the migration at the end of 2019. In German B2B, at the end of 2020. Nothing new after what we have described and showed you on the Capital Markets Day. Thereafter, the migration cost will go away, and we will see the benefits of the significant investments in lower costs. Moving on to customer experience and innovation, where we had another busy quarter. In German B2C, we launched our new Magenta TV platform, strengthening our market-leading content aggregation, including personalization functionalities and the seamless integration of over-the-top content. It's the biggest library you can get in Germany now. We are currently soft launching our new smart speaker, Hello Magenta. We believe voice control and voicifications of services will become a key interface in the smart home of the future. And we want to be part of it. Our pioneering Stream On product already has more than 1.5 million German subscribers. Customer service excellence remains a key priority. In Germany, we achieved further improvements in key KPIs. Our no-shows almost halved in the last 12 months, and our complaints are down by 30%. Our revamped service app was rated as outstanding by Connect magazine. In the US, we launched our next Un-carrier, the team of experts, driving an even better customer service experience after T-Mobile already achieved the highest wireless score ever in J.D. Power customer care surveys achieved last quarter. On the B2B side, our German ICT growth continues unabated, driven by cloud-enabled agile workspace services. T-Systems has certified and successfully launched its German health platform. In Europe, we were awarded new smart city projects in 4 countries. Moving on to slide 7, our momentum with customers remain very strong. 11.6 million German homes subscribe to our high-speed broadband products. In our German and European operations, we added 1.4 million converged customers and 1.7 million mobile contract customers. And you saw T-Mobile's relentless momentum when they reported results last week. T-Mobile also again raised their net add guidance last week by 550,000 at the midpoint and is now targeting 3.8 to 4.1 million branded post-adds in 2018 after 3.6 million in 2017. Fantastic. As mentioned earlier, our US colleagues have raised their EBITDA guidance for the year by $200 million, and we are happy to raise our group EBITDA guidance by a corresponding 200 million euros as well. Our outlook for our ex-US EBITDA remains unchanged. As always, our guidance is organic, and so our update is based on constant foreign exchange and excludes the newly acquired UPC Austria business. Based on the US dollar exchange rate used by our consensus of 1.18, our new guidance would be for 23.2 billion euros EBITDA. We also raise our group free cash flow guidance by 0.1 billion euros. The difference between the EBITDA and the free cash flow upgrades is explained by our decision to progressively reduce factoring in 2018 and beyond. Our dividend proposal for 2018 remains unchanged at 70 cents, now becoming very clear. With this, I hand over to Thomas, who will take you through this quarter financial updates in greater detail. And by the way, listen careful, because he's doing that for the last time in his life.
Okay, thanks, Tim, and a very warm welcome as always from my side here as well. And as Hannes and Tim promised, let me dig a bit deeper into this quarter's performance, starting with the key financials on the slide 10. Our reported revenues this quarter grew 4.7%. Organic growth was 4.1%. Our reported adjusted EBITDA grew 8.5% and would have been up 8.1% organically. And our ex-US EBITDA grew 3.2% this quarter, and this would have been 2.7% on an organic basis. Adjusted earnings were up 6.2%. Unadjusted earnings were impacted by the T-Systems write-down last year. And free cash flow was stable this quarter, which reflects phasing. Year-to-date free cash flow is up 8.5%, and we, of course, raised our full-year guidance here today. Now let's have a look at the German numbers. Headline sales were down 0.9%, driven by IFRS 15 effects, which we estimated around 1 to 1.5% of sales for the year as a whole, while our like-for-like service revenues continued to grow. Our EBITDA was up 2.1% year-on-year, on track for our full-year guidance to grow the German EBITDA from 8.4 to 8.6 billion euros this year. On the next page, you can see that our reported mobile service revenue, again adjusted for IFRS 15, remains strong at 3.1%, driving continued growth in overall service revenues. On the other hand, our fixed line service revenues remain slightly negative, mainly reflecting the revenue headwinds due to our advancing IP migration, as Tim has mentioned earlier already, and the sequential deterioration is due to softer wholesale business this quarter. Our underlying commercial performance in mobile remains steady, while we show only 48,000 own branded contract net adds, adjusted for the bankruptcy of one single B2B customer that would have been a normal 106,000 number. Despite some of the noises at the lower end of the market, we remain guided by our consistent more for more logic, as you could see reflected in our tariff update at the beginning of September. As you can see on slide 14, mobile data continues to grow, with average usage now close to 2.5 gigabytes, almost 1 gigabyte more than a year ago. 47% of our Magenta branded mobile contracts are now part of a convergent relationship, and 21% of our broadband households. Now moving on to the fixed line side on slide 15. We maintained our steady broadband customer intake despite our decision to lower promotions at the beginning of August. If you adjust for losses from our hard IP migration, which were broadly unchanged this quarter, we estimate a commercial net add share, again, north of 40%. Sorry. Despite a weaker contribution from wholesale, we delivered the 12th consecutive quarter of more than 500,000 fiber net additions. On the other hand, line losses grew sequentially this quarter. Again, this mainly reflects our advancing IP migration, which as a byproduct accelerates the erosion of legacy B2B lines. Finally, on this page, we added 51,000 TV customers. Here, our run rate remains below target, but we were able to improve the mix. Continuing with the fixed on the next slide 16, our retail revenues fell 0.3% year-on-year, which was a slight sequential improvement. As you know, since the beginning of this year, we include certain B2B broadband products in our broadband revenues, which largely explains the strong growth of 5.7%. Our like-for-like broadband revenues grew 2%, very much in line with the growth we have projected at the 2015 Capital Markets Day. Moving on to our two usual slides on T-Mobile US, who already presented, fantastic results again last week. In the US, we won 1.6 million new customers. This was the 22nd consecutive quarter with more than 1 million net adds. And on the next slide, as usual, we show some selected performance metrics for our US subsidiary. Our branded postpaid phone churn reached a new third quarter record low of 1.02%. Bad debt expense remained low at 1.2%. Our commercial results are underpinned by a strong network, and recent tests again confirmed T-Mobile's leadership. Cost of service, excluding the hurricane-related reimbursements, are up year-on-year, reflecting the accelerating build-out of our new low-band spectrum. Now moving on to our European segment. This was another quarter of consistent, strong commercial momentum. We added 297,000 new contract customers, 61,000 broadband customers, 35,000 new TV customers, and 229,000 new converged customers. On page 20, you can see that our European segments has continued on its new growth trajectory. both at revenue and the adjusted EBITDA level. Reported revenues were up 3.4%, EBITDA by 5.5%, both benefiting from the consolidation of UPC Austria since beginning of August. Organic revenues were up 2.2% and organic EBITDA 3.6%. At the 9-month stage, we see ourselves well on track for a full year and for our Capital Market Day guidance. Now moving on to System Solutions on the next slide, slide 21. 2018 is a year of transformation, as you know, as we ramp up investments in growth in the IP migration and our ambitious operational turnaround. Encouragingly, revenues and EBITDA grew this quarter. There's some phasing in this, though, and we reiterate our 2018 full-year guidance for 0.4 billion euros EBITDA, as well as our stated CMD Capital Market Day targets. The next slide shows the segment group development. We had another decent commercial quarter in the Netherlands with 57,000 contract net adds in mobile and 17,000 broadband net adds in fixed. Adjusted for regulation and IFRS, our Dutch service revenues would have been almost stable, and EBITDA grew 11% due to cost savings. Revenues for group development overall were slightly down due to one-off in our tower businesses. On page 23, we provide some more detail on our German tower business. Recurring rental revenues and EBITDA each grew 4%, similar to the last quarter, and that's mainly driven by efficiencies. In the last 12 months, we added 1,000 sites to our German footprint. We remain committed to our plan to add in total 9,000 German sites by 2021. On page 24, we show the main financial items. As mentioned, free cash flow was flat year on year, but we raised our full-year guidance today. Despite the free cash flow, net debt increased mainly due to the acquisition of UPC Austria. Net income grew with EBITDA offset by higher depreciation and minorities. We remain in our balance sheet comfort zone, as you can see on page 25. Our net debt to EBITDA ratio improved back to 2.4 times. And as always, my next two slides summarize our strategy and the commitments we presented to you at our May 2018 Capital Market Days. And I think we've made great progress towards these commitments so far this year. And with this, I stop, and I think Tim and myself are ready to take your questions.
Indeed we are, so thank you very much, you both. And now we can start with the Q&A section. As always, please press star 1 if you want to ask a question. If you want to cancel it, press star 2. And you can also send us questions via webcast or email, as some have done in the past. So starting with Fred of Merrill Lynch. Fred, can we have your question?
So I've got two questions, please. First of all, on the fiber side, I would like to know if there was any update on discussions with United on the combined fiber rollout. What are the parameters you have in mind and criteria you have for potential collaboration with them? And secondly, we have fairly subdued trends in the fixed line business from a broadband or TV perspective. Are you satisfied with the performance there? And what to the kind of outlook you think we can have for top line in this business on a midterm perspective? Thank you.
Yeah, thank you, Fred, for this question. Look, for the ones maybe not knowing all the details, we have offered United Internet a joint build-out of certain regions in Germany. A city like Berlin, an area, rural area in Thüringen, and an area in the western part of Germany in the Ruhrgebiet. And So we focused our regions where United Internet has at least some infrastructure through Versatel, and where the market share, gap between DT and United is fairly small, so that both of the companies are able to gain share in these regions. And the blueprint for this offer is the joint venture and the EWE-Tel project, where we made good progress over the last month. The idea of the proposal was to expedite FTTH deployments and to collaborate on the basis of a fair risk sharing. And we did not make the proposal to achieve regulatory relief already. United Internet has responded to our proposal by offering a 25% stake in a joint venture. Moreover, they also combined this with a demand for a national roaming deal. For us, both of these conditions make little sense, as you could imagine. We think, if you are building a joint venture, you have to take the fixed costs and the investments, proportionately, by the two parties, and carry out the risk, and then developing the new market out of it. So I would say that this discussion has come to a standstill. Nevertheless, there are a lot of discussions which are going on in Germany on this subject. As I mentioned, EWE-Tel, but there are more than a dozen other discussions on a smaller scale, which we have with local fixed fiber to the home operators in Germany.
And I think I'm gonna answer the second question, which was the fixed line trends. So I think the first message I'd like to give is, in terms of the commercial momentum we're having, in terms of the attractiveness of our products, the gross ads we're making in the market on the broadband retail side, I think we feel very comfortable. That's number one. And that is, by the way, also reflected in strong numbers on the B2B retail revenues. Where are weak trends on the fixed line side? It's obviously twofold. One is the wholesale side. One big part in the wholesale side is that there is a migration ongoing from a layer 3 product to a layer 2 product, which is not a surprise. It was clear since some quarters that this will take place. It's kind of optimization of players, and that this will have some impact. I think we are roughly on a level of 75% of all those lines being migrated from level 3 to layer 2. So that is to 3/4 done already. The second part is then our IP migration, and this is not, let's say, it's not market related per se, but it's self-induced. We believe it's right to do it. We'll keep going with that. As I said this morning in the press conference, we believe that a higher elevated level will stay for some more quarters, most likely by the end of 2019. But also, let me state, there is no surprise to us, and it's part of our guidance we've given in May that this will happen. So for us, it is like planned development. Just to remind everyone, the guidance we've given originally for wholesale and for broadband was wholesale around 0, broadband around 2. That's basically where we are now. We have ramped that up in the capital market days in May to around 2 on wholesale and broadband 3 to 4. You see right now retail is on 5.7, so a bit higher. Wholesale is a bit lower, so in mix we're good.
Yeah, so if you wanted the old CMD guidance, wholesale, was relative to that, wholesale was a bit stronger and retail a bit weaker. And right now we're seeing actually retail stronger and wholesale a bit weaker, but it evens out over time, and Tim is happy. So the next question is from Jacob at Credit Suisse, please.
Hi, good afternoon. 2 questions, please. Firstly, just in the context of the upcoming spectrum auction, can you maybe just sort of share your thoughts on why Germany hopefully will be different from Italy? And then secondly, your guidance for Germany EBITDA of 8.6 billion for the full year does imply an acceleration later in the year. maybe it's just rounding, but could you maybe just talk through, why the guidance suggests faster EBITDA growth in Q4 than what we've just seen? Thank you.
You cannot imagine how much time I'm spending these days on 5G. And just, to make that answer a little bit broader, I think we made a lot of good progress over the last weeks. I think the first and almost most important thing was that we, as the only player in the German environment, launched an 8-pointer program where we clearly defined what we will achieve within the next years. To give you a number, until 2020, we will have 99.3% of the coverage with a speed of 50 megabit. By 2022, we will have upgraded this to 100 megabit. And by 2025, 90% of the POP will be covered by 5G services. So this is, let's say, we talked about corporations. So a passive roaming or site sharing, as we call it, it would be enabled for the rural towers. And we even, approached the industries to say, look, just having a detailed discussion about an Anwenderkonferenz where we discuss the use cases for each and every industry which we are preparing with these days. The second, what we did is we aligned ourselves with all the associations in Germany which are quite influential, like the BDI, like the ZVI, like the VD. MA, like the VCA, there are 35, different associations from the different industries where we have now a joint position which has been published already over the last days. I think the big communication is coming out tomorrow. About an alignment, how we think, how the industry thinks this 5G deployment and the 5G auction should be designed. That's very important, guys, because there is an inflation of political demands which are taking place. Every politician thinks that 5G is an answer for drop calls, 5G is an answer for white spots, 5G is an answer for wild animal watching in the rural areas. So there are a lot of, let's say, political interests behind that, and we are trying to professionalize the discussion to the users' demands and giving it back into the authority of the Bundesnetzagentur. Now, with regard to the situation of the auction, look, this is one of the areas I'm not so worried about. There are a lot of areas I'm worried about in this 5G auction, but not about this topic. Why is that? Because every politician is asking for a better quality of the infrastructure than rather about higher proceeds. Germany's tax situation is quite healthy these days. Political leaders understand that they have to give this money back to the citizens, so they want to see the quality in the infrastructure, and therefore I cannot recall one politician who was advocating for proceeds in this regards. The second thing is the auction will include up to 400 megahertz of the 3.7 gigahertz spectrum and 120 megahertz of UMTS spectrum, which is in the 2.1 band. So if you consider three players, I think this is enough space for all of us, knowing that some of the spectrum will be reserved for local needs, for campus networks, but nevertheless, there's a possibility. I cannot, judge how relevant a fourth player might be in this case. That is something you can better judge from your perspective. The only one which I probably might, be able to see is United Internet in this regard, but I cannot talk about his plans to auction on this one. So therefore, I expect that that this auction is not going into Italian situation. And Minister Scholz, our Minister for Finance, has provided his own estimates regarding the outcome of what will most likely be the result of this auction. So there are some indication. Nevertheless, I'm more worried about some obligations which will be part of the definition, like a local national roaming or a passive sharing of sites or this kind of stuff. And this is something we are arguing on within the next 2 weeks, because in 2 weeks from now, the final design and the prerequisites for these auctions will be settled.
I think there was a second question around the how confident we are on the German 8.6 versus the 8.4 last year. After 3 quarters now, 9 months down the road, is up 110 million roughly, and how confident we are to reach the 200. So first of all, we are. That's the first answer. Why? Quite simple. You know, Q1 was up 1.3%, Q2 was 1.9%, Q3 is 2.1%. So that gives you already an indication that the way we've planned the year and it was laid out is in that up every quarter situation. Why is that? Now, there is obviously one part of ramping the EBITDA further up is cost savings, realizing cost savings. Those are coming from rental spaces. I talked a bit about that in the capital market days. Technology processes, fourth quarter will kick in. Tim talked about the number of no-shows being halved, which is obviously not only better service for a customer, but also cost reduction on the service side as well. Complaints down by 30%. So from all those areas, the measures we've taken, the longer the year goes, the more impact you see on the EBITDA side, and that kicking in is our plan, and so we are quite confident that we will see that 8.6 then.
Okay, so the next question, thank you, Thomas, is from George at Citi, please.
Hi, 2 questions, please. The first one is a follow-up from the earlier question around wholesale. And I was just wondering if you can give us an idea over the next 2 or 3 years, not just in the short term, how you envisage the different moving parts. So from your description, there are some headwinds. At the same time, at some point, you have vectoring options available. Is it part of your 0% assumption that you manage to upsell into vectoring or not? I mean, I was just interested to see how confident you are you will keep offsetting some of the headwinds. And then my second question is around the towers. And obviously now you had a few years of experience of running them in a slightly more independent way than as part of a division. And I was wondering whether it's something you're considering for some of your European assets. So not just to have a German asset, but run the rest of the towers as part of this group. Specifically, I mean, if you don't mind me asking, some of your subsidiaries are listed, whether there's any thinking of buying the towers of them. Thank you.
So I'm going to start with the wholesale German fixed line side. I think that was what the question was about. So just let me remind you, what we've seen last quarters, and I'm excluding the last 2 quarters, but last quarters, last 8 quarters, was a very positive support by wholesale broadband revenues in our total fixed line service revenues. It was always bouncing around 2 to 3%. Our original assumption was more like 0 or maybe 0.5%, so slightly positive, and it turned out that it was more like 2 to 3% for the time, especially in let's say end 16 to mid 18, roughly in that period of time. Where was that coming from? That run rate of 2 to 3% was basically wholesalers moving into higher speeds in the new infrastructure, and by doing that, you've seen the adoption rates on the fiber-based access lines on the wholesale side were always around 350 a quarter, 300 to 350 a quarter. That has slowed a bit down. That's number one, where some support is going away or has gone away last quarters. And as I said, the second one is more like a one-off. It's a migration of a base from a more expensive layer 3 to a less expensive layer 2 product. That's gone by 75%. There's another quarter to go, but there's, as I said, that it was clear that it will happen. But once that's gone, we will see again the dynamics of the higher bandwidth, customers moving to higher bandwidth again kicking in. As Tim mentioned, it's extremely important that the German regulators supported that more for more logic on the wholesale side as well. IPBSR pricing up 480 net from 100 to 250 as an example. So obviously our rollout of infrastructure, not only in terms of coverage, but also in terms of speed, upgrading the speed from 50, 100 to 250 is a strong driver for that development. This is why we guided for the next 3 years the market for the wholesale broadband revenues in 2% CAGR, and where we believe we will go back once that layer 3 to layer 2 migration is gone, that we will see that vicinity again. So on the other hand, we had when wholesale was more like 2 to 3%, we've seen a bit weak retail side. We guided that 2% for 14 to 18, and we've been more like 1%, sometimes a bit lower, sometimes a bit up. Now what we're seeing is a bit stronger retail and a bit less power on the wholesale side. As I said, it's important in the sum of both that we are in line with our expectations, and that's where we are today. And we'll feel comfortable that we'll be in line with that expectation, 2% for wholesale, 3 to 4 for retail in the future as well.
So, as you know, we have carved out our tower unit, which is now part of our group development segment. So this is, let's say, Thorsten Langheim's, business for special affairs. So that means, we want to change something, otherwise we would not put it there. So we will create additional operational and strategic flexibility for the group. Now, part of the strategy was also to insource the tower assets from the Netherlands and from Austria into this portfolio management of group development. This is currently ongoing. Further beyond that, DT owns a lot of towers in other areas, and there is an opportunity perspectively integrating even this assets into this entity. Independent from this growth, the company is today already number 1 of German tower operators, and it is as well number 1 in Europe if we include all the European assets into this one. We are now working with a very professional new management that we manage this portfolio in a much better way as we did in the past. I can talk about a new design of towers, which are becoming, we are pre-configured and manufactured. So the time to market build these towers is one of the changes. We are managing the cost base on how to handle and to maintain the towers. There is a triple-digit million cost reduction already, which we have in our plans on this one. So we want to really professionalize this portfolio. On top of that, we know that with 5G, and with the ambition to close white spots, we are increasing our tower portfolio significantly over the next years. This year in Germany alone by 1,300, prospectively 10,000 new towers only for Germany, and I think the same magnitude as well for Europe becoming the next year. So. The debt, the rating, or any kind of liquidity considerations for selling the towers is not a major driver for us at that point in time with the good balance sheet. But I can tell you something. My personal view is that if we are ready to go, I'm willing to consider even, a sale or a partial sale of these assets going forward. This hasn't been taken, this decision, but we would not, do all this work here if we would not, consider even, a value-enhancing strategy behind this asset.
Okay, thanks, Tim. And next we have Ulrich from Jefferies.
Yeah, thanks very much. I have 2 questions on the fixed business, on the retail side in both cases. The first one is on the VDS upsell. I mean, in the quarter, it was a bit slower than the recent run rate. Now, don't want to overstress the quarter, but is there anything in there? Just seasonality and will come back, or has it stepped down for maturity reasons, or why has that stepped down, the VDSL upsell? And the second question is the IP migration. I just, if I remember correctly, you sort of indicated that you would take steps in the second half of the year to mitigate the impact of the IP migration on the volume KPIs. Now the volume KPIs sort of have deteriorated even on the line losses. So So wondering what has happened to these efforts to actually bring that down despite the IP migration. Thank you.
Ulrich, I'm going to start on the retail side. The VDSL upside or the upside to vectoring infrastructure is quite simple. If you look at the numbers we laid out, it's only and solely coming from a bit of a slowdown of the wholesalers. Retail is intact, run rate is intact. There's no change there, and it's a bit of lower numbers on the wholesale side. I think on the migration, maybe Hannes here.
Yeah, just on the migration, I think at the B2C level, we're seeing a fairly consistent level of hard IP migration impact. On the B2B side, we are starting to deal with some more complex situations as we finalize the project, and so we're seeing a slight increase, and that's where the sequential step up is coming from. So it's kind of as expected, and it's not going to go away quickly, as we have said, but it's of course a project that we believe in, and that's finite since we are now at 82% for Germany with the IP migration. So next question is from Ottavio at SocGen, please.
Hi, good morning. A couple of questions on my side. The first one is a follow-up on the 5G. The team has mentioned the 99% coverage by 2025. I think that's probably also a target that he was given around October on a different platform. My question is that project been costed? If that's the case, could you share with us how much it would cost to basically achieve that particular coverage? Then is that coverage done all in mid-band spectrum, or it will be done on different layers across Germany? I believe that also you mentioned 50K sites to be required for 99% coverage. At the moment, we're around 27, 28. So how the build will be done, because I believe that it's not straightforward to build, considering that there is a lot of a problem with permits. So how the site sharing is going and the efforts, and how many sites you share already. And the second one, it's much more straightforward. It's basically on the European side. You had a pretty good quarter, but when you look at the delta, I can see that Poland has been one of the major inflection points. They went from minus 19.2% EBITDA fall year on year to plus 10. So if you can just tell us what's happened there and how sustainable is that particular growth rate. Thanks.
Look, the first thing is, what we are doing in 2020, 2022, this is all based on the 4G deployment. The clearing of the 5G spectrum is 2021, where we can then start, deploying the spectrum. And then we will deploy in our antennas until 2025 as well the 5G spectrum. So what we do at the first instance is, let's say, improving significantly the bandwidth with the existing bands, and then we use on hotspots prospectively in areas where we need the low latency infrastructure. We will then deploy the 5G infrastructure and the 5G antennas. So it's a mix of the 3.5 gigahertz spectrum and clearly the deployment of the mid-band and low-band spectrum, which we are already doing today. There's an optimization as well. Hopefully we can refarm some spectrum from the lower bands as well to that one. That would help us, to get better coverage with less sites. But this is the major rollout which we have foreseen here. Is based on the existing spectrum and existing antennas. On top of that, we have said 10,000 antennas coming on top of that. To keep in mind that we have 27,000 antennas already of today, so it's a significant increase going forward. And on top of that, for the high dense areas, there will be 10,000 microcells, which we are planning currently to fulfill the needs in the cities and in the hotspots as deployed. I think one of the concepts we just learned from the Asian countries are so-called kiosks, that you have certain areas where the CPEs are on a line of sight on the streets, deloading and uploading at very, very high capacities, but you do not have to deploy every antenna with this specific functionality.
I'm going to take the question around Poland. First of all, let me clarify that if you do a forced ranking of the countries contributing to the good development in Europe, you will see Poland at number 5 position. So it's not the biggest contributor, but for sure it's important to see Poland turning around. We've been always clear that we said last year we see better commercial dynamics, which keep going this year. We said this year we should expect also a revenue development year over year being positive, and from next year onwards, EBITDA, we're now seeing it a bit earlier. But to be very clear, also in Poland in Q3, you had a 20 million revenue one-off, which is a 6 million EBITDA one-off. So still Poland is, in terms of year-on-year development, kind of, as we said, stable, but not in the positive territories if you exclude the one-offs. Nevertheless, it's important to understand that our assessment that we started successfully the commercial changing and turning the commercial dynamics last year in Poland, that they are intact. By the way, this year, supported by good FMS developments, we see NPS, so customer satisfaction, loyalty, significantly going up. We moved ourselves into a number 1 position, as Tim mentioned. So we've seen that leading indicators of net adds loyalty, that has substantially moved. We see in revenue trends moving. Again, too early to call it a complete success, but all the indicators suggest that we are on exactly right track, and that we will keep going with that in Poland. But let me also be clear, that is not the number 1 driver for the EBITDA development in Europe.
In any case, it's a nice situation that we are debating which is the strongest contributor to Europe's growth. So I remember other days. Christian at HSBC, please.
Hey guys, a couple questions more on the commercial front. So it seems you launched a new version of Magenta TV. So basically also now a new OTT product. So what's really the strategy behind that? Just trying to understand that. Are you trying to steal more from cable and satellite or from other OTT players? And also, are you counting in these let's say non-DT fixed line customers also as TV RGUs? And then maybe on mobile, it looks like in November you have October you have increased the promotions from 6 months to 12 months, so becoming a bit more promotional again. You know, is it driven by incremental pressure that you're seeing in the market? Just trying to understand, how the mobile service revenue may develop in Q4. Thanks.
Yeah. So Magenta TV is a total relaunch of our entertain services. By the way, starts with the branding and the name. We that for our stationary TVs we had the Entertain as a name in the past. Everything is now called Magenta TV. We have a solution at home and we have a solution on the go. We have a full over-the-top solution which we have launched. And we have a new library behind that, which is including the long tail of a lot of, let's say, broadcasters, both from the analog side as well from the VOD side. On top of that, we include all the VOD platforms into it. And if you once have a single sign-on, you could easily go with the search functionalities into every kind of library, like Netflix, like the Maxdome libraries and others. And on top of that, we include all our long-tail sports activities into this, plus some exclusive series which we have recently launched. That is something which is then e-punkt, like an additional service which we include. So that makes the access to content, to all contents, much easier. It's an easy one-click scenario. On top of that, you have the aggregation format in a much more logic way. And what is happening is, if you watch this service, it's not anymore that you have this VOD side and on the other side the TV EPG. The content is merging, and it's tailored to your personal behavior. So this is the way how we see the future. It was the first time that we, on an agile way, developed this new platform in a very quick mode. And all the functions like time shift, restart functions, backwards EPG are still included in this functionality as well. Why are we doing this? You're totally right. We are trying to expand our go-to-market into areas where we haven't been before. A lot of the customers are not, just coming from the fixed line service and upgrading into a TV service. A lot of the customers will witness that this is a better way of watching TV. And with this perspectively, we are able to upsell the fixed line connectivity, hybrid connectivity, or even mobile connectivity to these customers. That's the idea, to expand the access capabilities as Deutsche Telekom at the same time. Are we counting non-DT customers? Yes, we do. Are we counting them under TV and RGOs? It's currently not relevant, and we have to update you. Honestly, I don't know, and we find out. Let's answer that in the back office here.
So on the question on the promotions, first of all, I'd like to remind everyone what we basically did by August, beginning of August exactly. We followed our more for more logic. We put some more data into the tariff plans and upped them with data volume. On the other hand, €2 higher MRCs. Within that movement, we in most of the tariff schemes, we upped the promotions as well from 6 to 12 months to keep it going in the first instance a bit easier. But in principle, very important to understand, there was a more for more up of €2 in the MRCs. And that is not so much, it's not pressure on the market, was simply to get that new tariff schemes with the new MRC price points going in the first instance easier.
Okay, great. Thanks, Thomas. So we have Josh next from Redburn, please.
Hi, guys. Thanks for taking my question. The first one is actually on TMUS. We often hear them talking about, offering super fast 5G speeds that should be able to disrupt the US fixed broadband market. I'm just wondering, that sounds good, but obviously, is that also a risk for you in your other markets, particularly Germany? Telekom with Deutsche is talking about doing fixed wireless. If TMUS can do it in the US, why can't TFD do it in Germany? And would that be a problem for you? Then I just wanted to ask you on the BT stake, what do you think about it here, the current valuation? Would you consider increasing your stake or something even larger? And finally, there hasn't been much talk of Vodafone Unity, the deal in this call. So I was just wondering, does that mean you're more comfortable with the deal now, or is there any update on that? Thanks very much.
I'd like to answer the BT question before. Look, before we take over BT, we're considering first taking over Orange, then KPN, then TeliaSonera, and then at a later stage, then BT. So that's to BT. With regard to the... No. Look, guys, I think, and I said that in previous calls, that In a base situation, our market is looking more negative on a business. In a kind of bullish environment, investors or people getting too biased to positive and very often. Now, I was already convinced that there will be a recovery of BT with all the activities this company has taken. It's quite impressive on how many areas BT is working at the same perspective. I'm convinced that they will see an uptake on their valuation going forward. But look, we are not, and I should not say that because I never comment on M&A activities, but it's part of our pension stock here, this asset. We are not in the in a phase of upgrading or improving our stake here. We are just on 3 transactions, UPC, the Netherlands deal, and the big one in the US. There are a lot of activities going on with regard to our 12.6 billion investments, which we have for the group going forward. Or 12.5, sorry, to be precise here. Hannes gets already very nervous. But therefore, there is no activities from us to increase our stake. Let's now see the evidence on how this business is improving. The new CEO coming into the office. Let's see how the regulatory framework is developing prospectively, and then we discuss further on the BT stake. With regard to TMUS, look, super fast 5G speeds to disrupt the fixed broadband market. That's definitely a business case for the US. And one of the reasons is this unbelievable expensive fixed line cost you find in the US market. So coming with a mobile technology with higher bandwidth at a lower cost, this is definitely a good disruptor. So that's slightly different in the European footprints. If you compare the TCOs of fixed line connectivity or fiber connectivity with the FMC proposition here. But we are not giving up because especially in the rural areas, the FMC FMS costs might be lower than an own fiber deployment. We are developing now the technology, so we will see anyhow a decretion of cost coming forward. We have our assumptions on and how we could commercialize this FMS offers going forward. We have trials in Germany, like in the city of Berlin and other places where we are experimenting with this. You know that we need a line of sight, so even the geographical preconditions have to be right. So I would say it's we have the same ambition, the same ideas, but the US environment is more attractive towards this case due to this current pricings than European market. But I think we are well positioned. We're just coming back from Asia, from South Korea and from China, where we have discussed the technology. We want to lead it in any case from where we are, and then we will even see the opportunities for FMS service or 5G service for B2C customers.
Yeah, on the, I think you also asked on the Vodafone Liberty deal, or at least we have taken note of that. There is the German cartel office today requests a referral to Germany. Our position has not changed. We continue to be concerned about and see market power, market dominance in the TV market, and that's basically what we have articulated. Just on fixed wireless access, we had quite a lot of that on that in our CMD in Claudia Niemeyer's presentation, and we outlined that one of the preconditions for fixed wireless access is also to have a strong fixed line network, which is something that we can use in Germany, and even then it has a certain scope, but it's not universal. And we're also doing a bit of fixed wireless finally in places like Poland and Austria, as Thomas has mentioned. And then just to clarify, that Tim's remarks related to potential acquisitions of our esteemed European peers were all on a humor basis. So they were jokes for the record. And with that, I move on to Usman at Berenberg, please.
Hello, thank you for taking a question. I've got two questions, please. Firstly, I was wondering how Deutsche Telekom views or thinks about the upside from monetizing the tower assets, either via a roaming agreement with, let's say, a fourth operator versus the risk of actually lowering the barrier to entry by making the tower company, let's say, more independent. Just some thoughts on that would be interesting. The second question was just on IFRS 16. I guess we all know that this will result in an optical increase in the leverage. But just at DT, I mean, does that optical increase actually result in a different consideration on the uses of cash, etc.? Thank you.
Look, let me, I've said a lot about tower monetization and our openness on this regard. Now your question is going with regard to a roaming agreement with a fourth operator in the German market. Look, the first thing is, in the context of the 5G auction, if you want to have a quality of a network, it is better not to have a national roaming. By the way, all investors understand that immediately. Because think about this logic by saying if somebody could focus its build out on the cities, somebody is building out a tower in the rural area, which is more costly, and the utilization of this tower is anyhow more difficult. He could easily get access to this one by regulatory enforcement. There is no motivation for a carrier to build out rural areas or more unproductive sites. So therefore, what we are fighting against is a kind of legally enforced national roaming on towers, because we think this would be the end of the rural build out, which is a prerequisite, by the way, for the digitization of Germany or other markets. So that is, let's say, the first observation. That doesn't mean that we are not open to partnerships in this regard. The first thing, we do not want that the regulator is doing that. We want to do that on a deliberate basis. And second thing, we do not want to have RAN sharing or something like this. We want to have, let's say, a site sharing. So if there would be somebody in a rural area saying, I want to put my antenna onto your site, we are open already today, and we made that a big commitment in our 8-point program that in the rural areas we will share these sites with a fourth operator or with one of our alternative players in the German market on a deliberate price negotiated basis and on a site sharing basis, no problem at all. We are even willing to share our fiber backbone networks, because we know how difficult it is. And we just announced a deal with Telefonica in Germany where we are enabling 5,000 sites of Telefonica with our backbone services. So I think there is a difference between a legal enforced national roaming and a site sharing or a backhauls sharing on a deliberate basis. We are open to the latter one.
And on IFRS 16, I think what will happen with after implementation of IFRS 16, once it's understood and transparent, etc., we will basically move the leverage as we define it today much closer to the rating leverage. Whenever we are in discussions with the rating agencies, we discuss rating debt versus rating EBITDA. So, and what happens with IFRS 16, that moves closer. So that gap we have today between our leverage comfort zone, as an example, of 2 to 2.5, and the rating agency's point of view, that gets closer, not close, but significantly closer. So that makes life easier in that debate. As the numbers are anyway in our annual report being transparent, you can look them up, last year's report. I think there is this is not a matter of transparency or a matter of will our perspective change, but rather more just a technical leverage, optical change, and that's it basically. By the way, we will offer a more detailed view and some better insights, and hopefully create better transparency on what happens there on an IFRS 16 webinar we're going to have end of Jan. So you're all invited to join there and follow and ask your questions there in detail.
Yeah. So thanks, Thomas. And next is Emmett at Morgan Stanley, please.
Yes, thanks very much, Hannes. Good afternoon, everyone. Thomas, as it's your last call, I guess I have to say gute Wünsche für die Zukunft. So best of luck. But as it's also your last call, I have to ask some very highly complex finance questions as well to you before you leave. So the question's really on your balance sheet and the cost of debt. Your cost of debt's already fallen quite nicely from around 5% in, I think, early 2015 to about, I think, 3.25% today. Now, obviously, the investment-grade telco debt markets are still very much open. So is there still any more kind of refi you think Deutsche can do in the coming years, or have you left anything to do for Christian at all in that regard? And just as a kind of a follow-on from that, could you kind of remind us of any refi opportunity on a combined T-Mobile USA Sprint balance sheet, and what the financing of that will look like maybe 2 or 3 years down the road? Thank you.
Thanks, first of all, for the kind words, especially those in German. Your German sounds really fluent. Thanks for that. And on the balance sheet question, I think what has happened actually is the significant change was due to the decision to move away from a strict standalone refinancing of the T-Mobile US entity into a optimization from a TMUS, but also from a DT shareholder. Basically, drive the costs of refinancing down and share the upside. That was the whole logic. We decided to do that when we saw that the free cash flow will nicely go upwards above the zero line. Just remember, everyone in 13 and 14 was still negative. So we said, let's use that opportunity. And that is not completely done in a standalone perspective. Looking forward, there's some more bits and pieces to be done, but the major chunk, the big chunk is done. So a bit left for Christian, but not so much. That's number one. I think number two is quite simple. As we announced in the market, the combined entity will start with a huge amount of debt, and that will also push the consolidated entity, DT, out of the comfort zone. And I think that will hold true for 2 to 3 years, depending how fast you will actually then see the transformation being successful, implemented. Afterwards, there's a moment of time where the DT side as well as the TMUS side need to look at whether they believe you can repeat that or not, but I think it's too early to speculate on that. For sure, one thing is clear: if the entity is going to be combined and consolidated at DT level, first 2 to 3 years will look difficult in terms of staying in the comfort zone, or will be first 2 years for sure out of the comfort zone we have defined. And there is no way from our point of view to optimize in those first 2 or 3 years, because we said clearly there will be a strict self-funding on the US basis once we combine the entities, as long as we don't see a clear positive free cash flow dynamics.
Okay, so I've got a question per email from Polo at UBS. The first one is on the rollout of super vectoring in Germany. Can you talk about the response to the new product on both the retail side but also on the wholesale side? I think it's early days, of course, but we have a very low 5-digit number there already. So it's not that there's no demand. And of course, as Tim has pointed out in his prepared notes, that we are also pleased with the regulatory framework here, which foresees €4.80 uplift relative to the 100 megs, and clearly shows that the regulator appreciates this higher speed investment. And then the second question from Polo relates to Europe. He wants to know, apart from Poland, what's driving the revenue and EBITDA growth in Europe, and is it sustainable, and is there upside to the CMD targets, basically? Thomas, you want to say something on that? Okay, then I quickly take that. Well, the CMD targets hold, right? And of course, you have always a bit of phasing. We've also reiterated our targets for Europe, but clearly it's good to see that there's a performance that's driven by revenue growth and also significant cost reductions. We've also outlined those cost reductions. The segment is on track for those cost reductions, and in this quarter, this drove healthy numbers, slightly higher than the run rate that we see for the medium term. But for the year as a whole, it's kind of only a little bit ahead. So as always, don't overestimate quarterly movements in a segment. That's also maybe an important point. Important is to look at what we do for overall ex-US, and there we have 2.7% growth, and that's bang in the middle of our 2 to 3% guidance that we have outlined at the Capital Markets Day for our ex-US EBITDA growth, 17 to 21. So the next question I have is from Robert at Deutsche Bank, please.
Yeah, hi there, thank you. Firstly, those B2B mobile customers you lost through bankruptcy, 60,000 or so, did you lose the revenues from them across the whole of the quarter, or did that happen sort of towards the end or in between? And then secondly, a quick comment, if you don't mind, on T-Systems. The EBITDA momentum improved materially in the quarter. Maybe that says more about the first half than Q3, but I think you had some agreement with the unions on cost cutting. Is that starting to feed through already, or is that more next year story? Thank you.
Yeah, Robert, first of all, the answer is twofold on B2B, or there are two elements to understand. The answer is yes, it's more or less the whole quarter, but it's also important to understand it is a relatively low ARPU quality player we're talking about, so it was not the big chunk of revenue impact you see there. It's much more on the line number than the revenue number impact. On T-Systems, Tim, you want to add something? He's signaling like hell that he wants to add something. So good. Okay, I go first with the T-Systems, and then you chip in. On T-Systems, the whole activity in terms of headcount-related activities, that's very early. We started a bit on the executive level, but obviously that is not the big volume driver. That is already going on. But the big chunk, the relevant chunk in terms of numbers, you will see kicking in 19. So it's too early to discuss that now. Tim.
Look, I had an answer which I wanted to extend a little bit from Polo earlier with regard to the super vectoring places. We are, in one quarter, we have opened up 8 million households, just, from a number perspective on 250 megabit per second. And by end of next year, we will have 28 million households. So, it is for me, yes, there will be a revenue impact and an ARPU impact coming. But for me, the most important thing with this one is the pressure which we had for, or at least, we were always expecting from the last years from our competition in this area is totally going away. And customers know and understand, that they have a better coverage. So it helps us both on a competitive communication perspective, and it helps us a lot on the political side. And I get already feedback, very positive feedback from a local minister president appreciating this build out. If you look to the take-up rates, 55% of our customers in the third quarter took up the 50 megabit service, and 45% of the customers took the 100 megabit plus upgrade. So you see that there is still a majority being happy with 55, with this huge expansion of our household lineup in the next 12 months. I'm sure that we always have a right answer for all digital services at home. So just wanted to mention that for us, it's only a business case issue at the first time. It's even, making this company future-proof.
Thanks, Tim. So moving on to Guy at Macquarie.
Yeah, hi team. Just a couple of quick things. You might have mentioned it earlier, but sorry if I missed it. Did you detail what your current dual costs are on your networks because of the IP network not being the dual cost from running an IP network? Secondly, on a more conceptual one of the reasons why tower companies are so highly valued, especially in the US, is they have very favorable contracts with their operators. And clearly we see that through both T-Mobile and Sprint, that are both paying very heavily currently for access to towers as they roll out new infrastructure. How do you avoid that in Europe should you actually look to sort of separate out the tower business? Or does that mean you're prepared to take a lot lower valuation multiple should you sell a stake because you're not prepared to give contracts like are given in the US? Thank you.
I'm going to start, Heike. I'm going to start on the costs on the IP transformation. It's around, on a quarterly basis, around 100 million OPEX and less than 100 million of CAPEX. That is on the IP network transformation. On the tower companies, maybe I start and Tim or Hannes chip in. I think, first of all, what everybody needs to understand, talking about US towers versus European towers, is the share of rooftops you typically find in Europe is much higher than it is in the US environment. That doesn't mean whenever you talk about multi-tenant approaches, obviously on a tower, that's easy because you have enough space, whereas on a rooftop, which is typically 2 to 3 meters in terms of length, so you can't put so much on it. That makes a difference, and that is, in the first instance, I think, important to understand. The second element is a tower company in the US typically not only provides the space on the tower, but also the fiber connectivity to the site. So, for instance, our fiber to the site connectivity we have in T-Mobile US is 98, 99%. It's extremely close to 100%. Which is typically in Europe not the case, where you have a tower company providing the space on the tower, but not the fiber line to it. So once you start to compare, I think it's always important to have that in mind, that there is a difference, a kind of natural difference you have of a US tower business versus a European tower business. Nevertheless, what you also have is, and that holds true for US, I think, as for Europe, within 5G, you will see network densification. You know, we talked about 9,000 to 10,000 towers. We're going to add up in the next 4 years, as an example. So you will see that densification taking place. By the way, obviously, that is more or less, or very often, it's white spots and densification. White spots does mean you share as a natural logic of reducing your costs. So you're open to go multi-tenant. You don't go normally for rooftops, you go more for tower infrastructure, so you change your mix towards more the US mix. So that is what you always need to have in mind whenever you assess that. But in principle, there is a reason why there is a slight premium on or should be a premium on the US side.
Look, with the multiples, I agree. The first thing is, we are talking about even for the European towers, about high double-digit multiples. For our asset here, and that is already compared to the current trading multiples which we have in our core business. This is a huge uptake. There are reasons for that the towers are less valued than in the US. Even the architectural, and Thomas mentioned a lot of arguments, but look, in the US you have much more bigger towers than we have them here in Germany. So the amount of tower, the sharing capabilities of this one is limited. So it's less on this one. On top of that, we would even accept a lower multiple just theoretically, because we would probably exclude some towers and would frame them as golden sites or golden towers. So we would not throw everything into this one as the Americans are doing today, because we would make a trade-off between our market leadership, which we have, as well from the coverage to the thing. So it's a mix, and it is an entrepreneurial decision, but exactly these discussions are taking place these days. It's too early to say how we play that, but I think there is a difference between US and Europe.
And with that, we go to Mathieu at Barclays. And that's the last question for today. and then we have some closing remarks. Okay, Mathieu?
If I can start with a question following up on what Tim was saying about facilitating access to your infrastructure for a potential fourth player. I mean, putting that, going even further down, I mean, would you be ready to give an attractive MVNO deal if that prevented the entry of a fourth player? That's the first question. In terms of coverage obligations, so you have volunteered to roll out more cell sites in rural areas, and you said that already some time ago. And I was wondering how does that play out in your negotiations at this stage regarding the 5G spectrum auction? Since you've already showed that card, if the outcome is not as you expected in terms of the obligations, can you reconsider your rural sites development? And then finally, we didn't touch on the Netherlands. I don't know if you have any updates in terms of the process, if you have made any amendments to your initial proposals or not. Thank you.
Okay, thank you, Mathieu. Look, the first thing, we have legal requirements in the markets with regard to enabling fourth parties on giving access to our mobile infrastructure, service provider, network alike. Beyond that, we are not considering any kind of additional MVNO type of access to our infrastructure. With regard to the coverage obligations, what we are measuring is today, when you look to the 3G build-out or the 4G build-out obligations, we are leading the pack, and we are very close to already fulfilling or over-fulfilling these historical auction requirements. This makes us always stronger. Our network is much better than in the local coverage than from our competitors, and therefore this is definitely something which will impact the negotiations here in this regard. Ich hoffe, ich habe die Frage richtig verstanden.
I'm going to pick up the Netherlands question. I think, as you know, we are now in the phase 2 of that merger approval process. The provisional deadline for the EC is November 30th. As you know, our position is not new. We firmly believe that this merger is pro-competitive because it will create a third player which has the scale needed to compete against the other two guys, being strong converged players. And we are in constructive dialogue with the EU Commission. And I think it's 2 weeks to go until we get the final feedback, and that's where I leave it and don't comment on any more specific aspects. Maybe because that was the last question, I take the opportunity to say at least 2 or 3 sentences because, as you all know, that's my last call. Next time you will hear Tim and Christian. What I'd like to do is thank all of you guys for the always open and constructive discussion atmosphere we had in discussing topics. Even if we were not agreeing, it was always very open and constructive to me. I enjoyed it because it is very important to the company here and also to myself, to Tim, to the management to understand what are the concerns in the market, what's your point of view, and also to pick up impulses you have, things you have seen somewhere else and we haven't potentially thought about it enough. So I'd like to thank you guys for that, for your trust you put in the company and into myself. And I'm grateful for the opportunity to work with you guys. And I guess I will meet some of you in the upcoming weeks still. And for those I will not see, as always in life, you meet twice. And I'm sure there will be an opportunity to meet again. Thank you, guys.
Yeah, thank you as well. Let me add some final remarks. Look, we have a quarter of a revenue growth of almost 4.7%, EBITDA growth of 8.5%, net profit grow, adjusted by 6.5%, net profit, overall by 120%. And despite the fact that we were investing 9.1 billion in this first 9 months, our free cash flow is growing by 8.5%. So all businesses are growing as we promised. Europe very strongly, 5.5% on EBITDA growth this quarter. The trend is now since 3 quarters very positive in this regard. And same is true for the German environment. US fantastic as always. Guys, we are quite proud about this quarter and confident that we fulfill the remainder of that year with this momentum. You feel me very optimistic towards the upcoming future. That said, there's never everything's rosy in our life. The biggest challenge which we currently are facing is this auction design for 5G. And in this, by the way, I'm not so concerned about technical requirements or about, let's say, the build out. It's more the question about are they combining the quality of the network with the national roaming obligations in certain rural areas? I think this is a negative impact which we see because there is no incentive for an infrastructure competition given, this is what I'm fighting with the team here. But overall, we are quite optimistic, and even the environment in which we are operating understands that we are one of the main pillars in our European markets, but as well in the US when it comes to the future digital infrastructure. That said, Thomas is leaving at, I would say, the best timing a CFO can have, at a very good performance and a good outlook for the year. I can tell you, I worked with this guy since 18 years. He cost me some hair, almost everybody. All of them, but I think you all know that we were a symbiosis in the way how we were managing this business in all these different areas, and I'm very proud that I had the capability to work with him. I can tell you by letting him go, which it's very hard to accept. Christian is a brilliant thinker and a great mathematician as well. He knows the business inside out from his marketing skills and from the German operation which he was running for ages. So therefore, I'm very relaxed on this regard, looking into the future. But nevertheless, it's my heart is bleeding as well by knowing that Thomas is not more on my side as he was for the last 18 years. I'd like to thank you for giving him the support in the past, and we all should have champagne at the Morgan Stanley conference, at least the ones who get invited. So with this, I'd like to close the call. Thank you for listening and for supporting us.